With experience comes a rather unexpected realization. Trading rarely teaches you how to make money quickly, but it does teach you very well how to preserve what you've already managed to build. And the longer you work in the market, the more you notice how much this principle resembles running your own business or any long-term project. I used to see drawdowns as a problem that needed to be fixed immediately. Any losing day made me want to recoup my losses as quickly as possible. But over time, I came to realize that just as there are slow months in business, there are periods in trading when the market simply doesn't offer favorable opportunities, and the task at that moment is not to force events, but to maintain stability. One such situation occurred in the gold market. After several successful trades, I felt I had a good grasp of the instrument and could trade more aggressively. But the market quickly put everything back into perspective. The price began to move erratically, the signals became less clear, and attempts to trade actively led to a series of small losses. It was then that, for the first time, I consciously reduced my position sizes and took a break instead of trying to make up for my losses. That decision turned out to be more important than any profitable trade. Interestingly, similar situations arise at work too. Sometimes a project or idea doesn't deliver the desired results straight away, and there's a temptation to start drastically changing strategy, grabbing at anything and everything, or making decisions under emotional pressure. But more often than not, it's precisely calmness and consistency that help you get through a difficult phase without serious losses. In the foreign exchange market, I particularly remember a GBP/USD trade, where the market moved for several hours without any clear direction. In the past, I would have tried to get in on at least the short-term movements so as not to be left without a position. Now, however, I calmly watched until the market structure became clearer. In the end, a single well-timed trade at the end of the session yielded more than dozens of chaotic entries could have over the whole day. Gradually, I've come to realize that discipline isn't a constraint, but a safeguard. It is the rules that help maintain balance when emotions push us towards impulsive actions. I've also started to view time differently. At the start of my journey, it seemed that success had to come quickly. Now I understand that in both trading and business, real results are built slowly, through repetition, mistakes, experience, and the ability to stay the course after temporary setbacks. Perhaps the main lesson of this stage is that consistency is always more important than speed. You can achieve results quickly, but it is far more difficult to sustain them over months and years. And the further I go, the more convinced I become that the market tests not only analytical skills, but also the maturity of one's thinking, and that goes far beyond trading itself.